Hello everybody, Daniel Zavala here, and in this video I want to do an overview explanation of different types of investments, and then we'll dive a little bit deeper into the different aspects of the stock market in the second half of this video. Try and keep it short, so let's dive in. Also if you like this video, please like, share, and subscribe. So diving in, what are different types of investments or asset classes? We have stocks or equities. So ownership in companies, publicly traded companies, businesses. We have bonds, we have real estate, hard commodities, soft commodities, currencies, cryptocurrencies, intangible assets, and collectibles. So moving to the next category, we see a breakdown a little bit further. So within stocks, these are publicly traded companies we're talking about, we have indices, sectors, and individual stocks. And this whole chart over here, which I'll explain in the second half of this video, will break that down farther. Micro cap, small cap, mid cap, large cap, mega cap, these are the sizes of the companies. The smaller the company, it'll be micro cap if it's really small. If it's a really big company, the biggest of companies will be mega cap. So these are describing the size of the companies. When you have a distribution of earnings, that's called a dividend. Okay, not all stocks pay dividends. Bonds. Bonds are companies or government's debt. So you have government bonds, corporate bonds. Government bonds. You have the U.S. The 20-year U.S. Treasury bond is an example, and there are also small government, like local governments, whether it's a city or a region, known as municipal bonds. And the income from those are yields. Corporate bonds are for company specific, so like Coca-Cola, Apple, TNT, any of those big blue chip names, they might have bonds that investors can buy into as well, and they pay out interest or yield as well. Real estate, you can own real estate directly, or you can become part of a syndicate to where you're a direct owner with multiple owners that invest in real estate, and you can read for yourself different examples. Income's called rent. So REITs are real estate investment trusts. This allows you to invest in rental real estate through the form of what's like a stock on the stock market, and there are lots of subcategories within REITs. Hard commodities, precious metals, gold, silver, platinum, palladium, industrial metals. Energy commodities are unique in that oil and natural gas specifically, you can own an oil well, or you can actually invest in what are called MLPs, member limited partnerships. Those are in the form of like a stock, kind of similar to REITs. It allows you to be an owner of like a pipeline or a oil natural gas storage facility, but through the form of what looks like a stock on the stock market. And those earnings are called distributions. And there are sometimes tax advantages to owning certain types of those commodities. And agricultural commodities as well. The tax advantage on these might come in the form of if you own actual cattle or hogs, like a dairy cow, it's producing milk, that would be an asset you can depreciate, and there might be some major tax advantages there. Or if you're trading in the futures market, profits on futures contracts are taxed differently than profits from when you buy or sell just stocks or bonds for that matter. Currencies, cryptocurrencies, that's definitely a newer thing the last few years, becoming more and more mainstream. And this year in particular, just last month, a major conference was held at the beginning of February of 2021, where a lot of, I think either hundreds or over 1,000 CEOs were invited, and this company which gave them their playbook said, hey, we put all our cash in cryptocurrency, specifically Bitcoin, that's what they were talking about, and here's our playbook of how to do it, because you and I, as individuals, can very easily and quickly buy and sell cryptocurrencies. However, big companies have a lot more regulations and things that it's more complicated. There's things they have to do in order to be able to even do that. So That's different for them. So that just started happening, and we've seen the price of Bitcoin shoot way up the last month. And who knows? The sky's the limit. No one knows what's going to happen. So it's a really interesting time with Bitcoin and cryptocurrencies in general. Intangible assets. So, for example, if you write a book, compose a piece of music that you can sell or license, income from those intangible assets are called royalties. And collectibles can be thought of like a hedge against inflation. You could also throw silver and gold, coins into this category. Firearms and ammunition is another very common one. Of course, rare artwork, antique sports, collectible cards like Michael Jordan, basketball card, Babe Ruth, baseball card, those kinds of things. So moving into the second half, the stock market breakdown. So we're talking about the stock market. You have indices or indexes. So S&P 500 represents basically the 500 largest companies in the U.S. The NASDAQ 100 are 100 large companies in the U.S. with a heavy emphasis or heavy focus on tech companies. The Russell 2000 are 2,000 small cap stocks in the U.S. The Dow Jones Industrial Average is made up of 30 companies and stocks, as far as I know. And this ETF, USMV, is the ticker symbol that follows similar to the S&P 500, but with different allocations across the sectors, focused more on value stocks, okay, big value, also known as like cash cow companies, more so than growth type stocks. So one easy way to kind of gauge whether a company is a growth stock or a value stock is if they are profitable, keeping that in mind. If they are profitable, if they're paying a large dividend, for example, Coca-Cola, Procter & Gamble, these big, mature companies maybe paying a slightly larger dividend, you can consider that a value stock or a cash cow, more like a cash cow. But if the company is profitable and they're not paying a dividend, that would be considered a growth stock. That's one really simple way to think about it. Paying a dividend, more value; not paying a dividend, more growth, assuming that they're profitable as a company. And then if you want to look at different markets, whether it's emerging markets, that might include India or you could potentially throw China in there too. Companies that are markets that are really growing, or Brazil a few years ago was one of the big ones in emerging markets. Global markets as a whole, or country-specific ETFs. ETFs are like baskets of stocks, of equities, kind of thrown together for a specific purpose. So these are the most common, or probably most publicly traded, actively traded, I should say, ETFs in these categories, from indices and individual companies or foreign markets. And then we have the breakdown of the different sectors within the stock market as a whole. So for example, if we looked at the S&P 500, these would be the different sectors within the S&P 500. We have financial companies, energy, materials, utilities, real estate, industrials, and so forth, and so on. And then these are probably the most actively traded ETFs within these categories. And then we have biotech and semiconductors thrown in there too, but they're technically not individual sectors by themselves. And these allocation percentages I have listed here are not recommendations. These are my personal opinions for my own personal investing. You definitely want to have a maximum allocation number for yourself to determine what the max amount of risk you're willing to take is. You never want to take too much risk on any one particular stock or even one particular sector. Kind of a general thumb is you never want to put more than 20% into one sector, and you don't want to have more than 15% in any one particular stock or specific underlying. And that would really be pushing it. That would mean If you put 15% into one specific stock or one specific underlying, that means you have done your research, you're very confident, and you are okay with the risk associated with that investment. And the volatility, the swings, and the profits and losses that come with that. So I hope this video was helpful. And again, please like, share, and subscribe. And God bless, and talk to y'all later.